Nice to have you on board. I want to do a little bit more of a deep dive into the economy and where we're going. Dan Varroney is joining me just now. And let's talk about gasoline prices soaring to $3.20 a gallon on Wednesday. That's according to some of the AAA data. Then I'm looking at flashing a warning sign for the nation's economy as the war escalates in the Middle East, a topsy-turvy stock market, a stock in oil prices, and jumpy bond yields have taken hold along the rise in the price of fuel. And this overall economic impact of the war will likely depend upon the duration and the intensity of the fighting. Economists think it may be a prolonged situation, and it may drive up an array of different consumer prices. And economist Dan Varroney is on with us. And Dan, I want to welcome you to the show, man. It's nice to have you on. You are live across North America. Welcome, sir.
It's a pleasure to be with you, Mark.
Thank you, sir. Good to have you on board. And, let's talk about this. I mean, are we just kind of digging the economic trench, if you will, getting ready for maybe prolonged combat with some economic uncertainty? Welcome. What do you think?
So, first and foremost, markets hate uncertainty. They despise uncertainty. That's why you've seen all the volatility in both the stock market and the bond market this week. That's the first thing. The second thing is that when oil prices move, the trucking industry feels it first, right? So everybody listening today sees it at the pump. They're seeing it in the diesel prices, and it's all as a result of the Strait of Hormuz, right? That's that narrow little waterway between Iran and the Gulf states. That's where 20 million barrels of oil move every day, 1/5 of our supply. So that's why we're in suddenly now the $90 per barrel range. That's what's going on. What I will tell you is that as we moved into this week, the economy was actually on firm footing. Oil prices were down. Inflation was down to like 2.4%, the consumer price index. We saw strong job market in January. That changed today, and it looks like this has been an extremely challenging week for the economy. However, let me just put some bright spots on this on balance. What's called the Institute for Supply Management numbers came out this week. The manufacturing numbers were up, so there's some growth in manufacturing. The ISM numbers for services were up, since that's 70% of the economy. That's very encouraging. When the jobs report came out today, wages are almost up 4% year over year. The private sector jobs numbers that came out on Wednesday were up, and a lion's share of the job creation in the prior month came from, no surprise, small business. And I say this because my book, Rethinking Economic Growth, focuses on small business. And in my research, I learned that 2 of 3 new jobs created in the marketplace in the U.S. come from small business.
Well, take that a little bit further, because most of the audience said you're speaking with our small business owners. They own their own trucking company, maybe 5 trucks, 10 trucks, some as high as 100, even more. So for the small business operator, depending upon whatever side of the economic aisle you may fall on with manufacturing or whatever kind of product you're putting out there, I mean, is it kind of one of those things where based on some of the numbers you're mentioning, with some maybe good footing out there, that a lot of folks are still going to wait maybe 90 days, 60 days, last quarter, Q4, before they make any sizable investments with confidence in the economy?
So I think that's safe to say, but I'm going to look at the other side of that on a balanced perspective, and here's what I mean by that. So since the lion's share of your listeners are small businesses, they've got the ability to go out and buy a new truck and literally write off 100% of it in the first year. So I think that's good news for them. I think the other thing is that income tax rates are down. If they adjust their withholding, they'll be able to take home more. I'm also seeing that tax refunds now are anywhere between $3,200 and $3,800. That's another opportunity for your listeners as well to get some cash in their pocket. But in terms of the current situation as it looks in the Middle East, are things going to get better? The answer is it depends on what happens. militarily, what we're all hearing is that in terms of the U.S. military benchmarks, we're way ahead where we thought we might have been at the end of the first week or so. So I think that's a good sign. But on the other side of that, we don't know what stability looks like. But I think if there is stability 30 days from now, I think we're looking at a precipitous drop in oil prices. So that's honestly what I think. I don't think this is a full-time thing. So where there's been a precipitous spike, there'll be a precipitous drop if things stabilize in the next 30 days.
Okay, very good. Interesting that. So in other words, don't rush out and, buy new equipment, maybe, or unless you have to. But would you say that most of the cycle where people trade in equipment could go a little bit longer? Maybe they're holding on to their equipment longer than maybe they normally would, that kind of a thing. And the other side of that is the manufacturing numbers. You mentioned the Institute of Supply Management and their numbers that they put out. They did look pretty good, but should we be cautious about, what is that term that Alan Greenspan used years ago, avoiding irrational exuberance when we start to see flashes of a turnaround? What are your thoughts here?
So here's what I would say to you. I'm not looking at it from an irrational exuberance perspective, right? So the data is the data. There is promising data. So, for example, if this war didn't happen in Iran, I think that the economy would be accelerating at a considerable level. I think this is going to have an impact on growth. I believe it was the Atlanta Fed came out today and said they took what would be first quarter growth from around 3% down to about 2.1%. So that's what I think. I do not think, by the way, that we're headed for a recession by no means. And one of the reasons why is that consumer spending is still strong. The retail numbers are stable, which is a good sign because we're a 70% consumer-driven economy. In addition to that, we're pumping a lot of our own oil. We're pumping about 13 million barrels a day here in the U.S. So that's going to help us from a demand perspective.
Okay, absolutely. So the philosophy of drill, baby, drill is really bearing fruit, it sounds like, maybe due to the shale situation.
It absolutely is. And what I would say to you is I think the administration, even before the Iran war, dating back to last quarter of last year, was looking into ways to further expedite permitting. And in doing that, there'd be even more drilling. So the greater the degree of drilling, the greater the degree of oil. And that would, I think, literally address any short-term immediate demand shocks we might face.
Okay, we're going to do a commercial break. And when we come back on the other side, we're going to pick it up. And Dan Varroney is on with us. Dan, let's get your website out, sir. Where can folks find you, read up on you, and take a look what you got? What's the website? Where can I go?
At danielvarroney.com, and they can find my book, Rethinking Economic Growth, at amazon.com.
Okay, very good. We're going to do the break, and so hold on. Drivers, would love to get you on board if you want to chat with him. You know, in this day and age, just from a general perspective, are you feeling good about your economy right now, the economy in your world? In your immediate orbit, are you doing pretty good? Are you getting good rates? Are you making money moving the freight? Or is it a situation that you're just kind of hanging on with your fingernails, hoping for the tide to turn, getting better? The predictions have been all over the map. Q1, they thought it was going to get better. Q2, who knows? Some of the predictions coming in for market turnaround could be the fourth quarter, maybe next year. So are you feeling good about you with your money? Stay tuned. More straight ahead. SiriusXM 146.
We now return to Mark Willis and Road Dog Trucking News on SiriusXM's Road Dog Trucking Radio.
Hey, drivers. I want to welcome you back. Nice to have you on board. And economist, strategist, rather, and great to have you on board. Dan Varroney is on. And, Dan, it's really good to have you on board and chat with about this stuff going on. I appreciate you jumping in. It's really quite an economic puzzle that you think about. From the standpoint of, the everyday person trying to make ends meet, living paycheck to paycheck and maybe hoping for the best with a company raise and all of that. Where do you see that overall going? Will we see maybe wages starting to go up again? Wages have been flat in so many different areas that we've been talking about. Where do you see that overall wage growth for the next year?
So I feel very good about wage growth. We saw wage growth up in the 4% range for the second half of last year, and in the jobs numbers that came out today, it was there, and I believe wage growth will likely grow to about 4.5%. Why I'm excited about that is because I believe with inflation at about, in round numbers, 2.5%, that workers are actually able to keep more of that money and have it to pay their bills, to buy their food, to pay their rent, or in some cases pay their mortgage. And the other thing that I would say to you with regard to wages is that according to ADP, they're saying that median pay is up 4.5%. ADP also noted this week on Wednesday that for people leaving for a new job, that their wages are jumping up 6.3%. So I thought that was absolutely very, very good news.
Where are companies finding the money for that? In the form of higher prices on the consumer level? Where's that money coming from, in other words?
So in some cases, that's a great question. So in some cases, more efficiency as a result of technology. Companies are far more efficient. The second thing is that with the new tax breaks, they're finding they've got more money to spend. They're taking that money and they're putting it back into their employees. And third, in some cases, they're getting them through price increases, and consumers are paying them. So from those three places.
Okay, very good. Is it a good time to go in and ask for a raise, in your estimation? Kitchen table economics, in other words. What do you think?
It's always a good time to ask for a raise, and here's why. If you're doing a great job, meaning you're hitting all your numbers, or if you're exceeding all your numbers, you absolutely need to go in and ask for a job if you're exceeding all your numbers.
Okay, so don't be shy. In other words, right?
No.
Go in there and say to the boss.
Absolutely not, because we're in a low fire environment. Companies are trying to hold on to their best people, and the way you're going to get held on to is with a level of appreciation through your wages.
Yeah, absolutely. All right, drivers, you're more than welcome to join. Dan Varroney is on, economic strategist on the line with us. And, when's the last time you maybe went in and asked your boss maybe for an increase in the mileage pay that you're getting? You may get a certain rate per mile, and maybe pretty much everybody's getting that, but it's okay to go in and say, can you give me a little bit more? When was the last time you did that? It's 888-876-2336, 8888 Road Dog. And again, Dan, thanks very much for joining me on the program. In this day and age, when you mention the energy sector, like really leading the way here with a lot of elements of the economy that we talk about, I would happen to think that the oil industry, the energy industry, really learned a lot of lessons from years gone by, like with drilling, for example. Technology really at the forefront here, and that's helping companies, I would imagine, like Halliburton, maybe avoid hitting a dry hole when it comes to exploration. Technology making it easier, and with that, AI. How is that technology figuring into that to make the economy stronger?
An awesome question. Here's why. What I'm impressed with throughout the oil industry is you've got a lot of engineers, a lot of really smart people, and for the publicly owned energy firms, they need to deliver ROI to their stockholders. And their hedge to achieve their targets, their revenue targets, is technology. If we're making the investment, are we going to be able to make a sufficient or substantial enough yield? They're doing it, using it in the following ways. One is, where are the best possible places to strike oil, as it were? Secondly, what type of equipment do we need? And with that type of equipment, how can we utilize that equipment efficiently? And then how can we direct our manpower in such a way that we're in line with our equipment and our opportunity? The oil industry is far superior to where it was 3-4 decades ago.
Okay. Where do you find the manpower? That's been one of the big questions in the trucking industry. That many have said, well, we've got a driver shortage. There's really no driver shortage, but it's a shortage of qualified drivers. So where do we find the manpower, the people power, to move this economy forward? Where are we looking?
Interestingly enough, when you look at the oil industry, you're looking at an industry where workers, especially those in the field, are extraordinarily well paid. And they have done, I think, a very effective job of not only recruiting but retaining their workforce with salary and incentives to stay on the job. So I think workforce-wise, I think they're in pretty decent shape.
Yeah, and I think that's going to be one of the key elements here, right? Because whatever company you're working for, say you're working energy, you're working maybe in manufacturing, trucking, pick it. I mean, just pick a company or pick a sector of the economy. Mm-hmm. People are going to want to see advanced opportunities. In other words, that if a company is, say, more willing to offer maybe a frontline job, they better be in a really good position to offer maybe incentives to move up. Maybe from trucking on the road to maybe a safety director, maybe, say, on a manufacturing front line, maybe on the shop floor. I'm using air quotes, maybe to get into management. Or maybe a CEO spot a little bit later on. Wise, do you think? Have that plan of action for growth?
So what I will tell you is that in the last decade or two, we've taken on what is the apprenticeship model and brought people in and given them lifelong career paths. I've seen that in industries across the board, especially in the food industry, like the baking and frozen food industries. I'm seeing it more in the automotive industry as well. Because, you want someone to have the lifelong career opportunity where they can begin at the bottom, as it were, and then have that early, mid, and late career opportunity, so much so that they're able to retire from that job and that company.
Yeah, absolutely. And when they do retire, it's going to be a lot more than that gold watch. So, man, lifelong stories there. And maybe putting, some really good money away. So with this being said, with all of the tensions going on in the Middle East, with tensions going on, U.S., Israel, Iran, the war involving Ukraine and Russia, we've got to take things a little bit slower when it comes to our spending. In other words, when it comes to, like, maybe investing for the future. Maybe invest in a 401k, put the max in if you can, and let it, just let it go from there. In other words, if people are reading more and more economic doom and gloom, they shouldn't panic, right? The economy is really doing okay
absolutely.
At this point.
Yeah, the economy is absolutely doing okay. It's actually doing okay to pretty well. And by all means, invest in your 401k, invest in equities, and remember, your 401k is for the long term. And that's something that we've encouraged our 3 kids to do, and it's served them pretty well. And it's required some discipline on their part. And the other thing is that, as you know, Mark, employers in a number of cases have matching percentages if you're investing in your 401k. By all means, take full advantage of that opportunity.
Yeah, that's free money. It is. That's the way to look at it.
Oh my God, yeah.
That's the way to go, folks. I mean, it's free money on the table. Grab it and put it into the account. But let it sit, let it grow. All right, Dan, thank you, sir. Great to have you on board. I'd like to do this on a regular basis and get you back on and talk about some of the ins and outs, the twists and turns with the economy. Dan Varroney, economic strategist. And Dan, again, thank you very much for joining me on the program. Let's get your website out there again, good sir. Where can folks find you? Get the book. Where can they read up on you?
DanielVarroney.com. The book is on Amazon.com. It's called Rethinking Economic Growth. Pleasure to be with you. Happy to come back.
All right, very good, sir. And thank you for the time. That is Dan Varroney.